Good morning, and thank you for joining our webinar, Leveraging Technology to Transform for Finance for the New Normal. My name is Kim Anselmo, and I will be kicking off our webinar this morning with a couple of housekeeping items. Just wanted to go over the GoToWebinar. You can maximize or minimize the webinar pane during the presentation by using the red, orange arrows on the buttons. And during the webinar, you can also ask questions. So just to let you know, we're going to answer those questions at the end of the webinar as time permits as well. So also for your audio, we want to ensure you have good quality. Please check your settings so the appropriate audio option is selected. If you're using your telephone, please click on the phone call audio option. Or if you're listening through your computer, then click on the computer audio option. And with that, we're going to go ahead and get started and introduce Scott Schimberg, our partner for consulting, and John Kogan, director for finance.
Good morning, everyone. This is Scott Schimberg, a partner at Armanino. I've been with Armanino since since 1998, so quite a bit of time. And looking forward to sharing some information around how we're leveraging technology to transform organizations, and particularly around times of COVID like this today. John, do you want to introduce yourself?
Sure, we'll just do that real quickly. John Kogan here, director in the Strategic Finance Outsourcing group at Armanino, and looking forward to taking a now versus then look at FP&A and related topics.
Fantastic. All right. All right, so one thing that Armanino has done for several years is talk about the CFO evolution. And I think that's a good starting point to frame our discussion today. So if we look at the lower left-hand corner, what we found is that CFOs and leaders of finance organizations are spending 55% of their time as an accountant. And what their desire is to really move into that upper right-hand direction of spending more than 50% of their time being that leader and strategic forward-looking person. And over time, we found that the CFOs are facing challenges, and we call that disruptive market changes that come in. We've also labeled it as VUCA, which is volatility, uncertainty, complex, and ambiguity. And it's everything from competition coming in, geopolitical issues that come up, customer demands that change, and even with some of what we've looked at in the recent times of a pandemic really changing the requirements of our businesses that we have today. And what we look at is the role of the CFO being the innovator and the influencer to really create a change environment that allows an organization to adopt to the new disruptive markets that are coming into play with them. So that's kind of like the framework of what we're working with. And so we'll talk about some of the things to think of being the innovator and the influencer in an organization in today's disruptive market. So we all know that we were in the COVID situation. It's had an impact on most businesses to some degree, either the way they're working, or the way that they're working with their employees. It's had some changes. And so one of the things that we look at doing is navigating to what we'd call a new normal, or what the new set of activities are coming into. And so it's everything from triage of identifying it, finding out like what are your options to be able to do, make the transition, optimize it, and then get back into the growth mode that we'd all like to be in, and we've experienced for several years in the past aspect. So let's talk about a few areas to kind of focus in on and starting to make some changes around an organization. And what we found is that even in today's environment where there's a lot of remote work being done, there's still a lot of manual processes. And if we kind of think about in the procure to pay, and that's what area that we'll start in coming in, the manual processes that are being done around getting approvals to spend, the invoice approvals that are coming forward that used to be either on paper or now in a lot of cases buried in email. you know, having processes around storing the actual copies of invoices, creating an environment that you have to be in an office or have. In a lot of cases, we're seeing that companies are still requiring this match, and they're doing it at people's houses, believe it or not, or at their homes versus an office. Physically printing checks and then running around finding signers in their area to get checks signed, or leaving them at an office, and then a couple hours later the signer comes in and signs them, and then literally physically mailing checks. That's what we're seeing some companies still having to work with. And what we're finding after making some changes to their organization on the procure to pay, they're having online purchasing requests that have an approval process that's all online. It's out of the email. They have an electronic invoice process. So even if you didn't have a PO, there's a process to go in and submit an invoice, have it approved, and have it sent out. There's automatic matching that you could do, three-way matching between a PO, or a receiving document if need be, or the receiving of even services that have been done, and to the invoice. That it speeds up the process of the matching piece of it, and it's all electronic online from that the system standpoint, and even storing the invoices so that you don't need the physical file anymore. Having electronic check selection and approving online which invoices to pay versus having a printed form. I remember being a head of finance and having printouts of a check, a pre-check run, and evaluating the printout. Those are now online from that. So you don't need a paper copy or don't need a printout anymore with the systems that are available today. And then the having electronic payments and payment services that if a check still wants to go, there are plenty of payment services that can do that for you, so you don't have to be in the office or stuffing checks into envelopes and mailing them out. It can be all done online and taken care of, which is fantastic from that. So how do you get there? And the big piece of it is having the mindset. When I talk about the mindset, it's getting comfortable being online around the payable process. A lot of companies do it. Publicly traded companies are doing it today, and it's successful. It's auditable. The controls are in place. So have the mindset that it's okay to do that and make that transition. That's the first step. And then the second step is understanding the requirements, as not all solutions will cover all of the requirements. So you have to make sure that you understand what your individual requirements are, and be able to define those so that you can have the system that you're looking for, have that all pulled together. And then go through a selection process based off of those requirements, adopt the solution, and then make sure to set up the electronic payments and the payment services as part of it. Really execute all the way from the start of it, of having online requests and approvals of purchasing, all the way through to making the payment so it's all online and not requiring to be in the office. All right, we'll get into record to report process, and this is really around like the month end. We see today several companies using either no month-end checklist or an Excel-based checklist of all the steps and processes to go through at month-end. Reviewing and reconciling accounts in a manual way, going through and having it 100% visual and inspection of it. Not necessarily having transaction approvals or having manual approvals of checks, maybe, or of journal entries, maybe kind of post after they've been posted, going in and reviewing them. And then a lengthy process around generating reports, spending a significant amount of time preparing the report and not enough time really analyzing the report and interpreting the data that's coming out. It gets to be an exhaustion period of, hey, I got the report generated, But the real value from a CFO and finance leadership is, what is the report telling the organization? What decisions need to be made? So after making this transition of pulling in solutions that can help manage a month end, there are tools out there that can integrate in with the general ledger and your reconciliation process and keep track of where you're at in the month end close process, which accounts have been reconciled and which ones have not. And they'll give you a percentage of, are you on track for your timeline to close the month or not. There are even solutions out there that can do what's called like an auto certification of the account, meaning that it hasn't changed, the reconciliation still stands. You don't even need to go in and look at it. And that's a huge time saver if you have a large chart of accounts or multiple divisions that are coming in. And then modern day technology has online system approvals for journal entries and postings, so that it's done before it gets posted to the system. It keeps track of it, of who approved it and when. From that, it is auditable. It complies with the internal controls process around, the preparer and the approver is not the same person. From the system, saving the time and not requiring to have either binders or Excel spreadsheets keeping track of the different journal entries that have been approved in their system. And then I put on the slide accountant-built reports, and that's an important piece of it. The modern tools have simplified the user interface around end users or accountants writing reports, kind of removing some of the IT infrastructure, if you need, that can get in the way of accountants getting their data pulled together. And it's a repeatable process that can help reduce and remove the lengthy process around generating reports, of having an automated standpoint that just the reports get generated when ready, and the accountant can control the changes if and when they need to be done. Much better than having to be dependent on someone else to go out and get the data for them. All right, so how do you make changes around the record to report process? And this is the real big piece of it. Make the decision shift from the accountant to the leader. Remove yourself from being stuck in the accountant role and make that transition to be the real leader, as we talked about in the CFO Evolution at the beginning of this webinar. Understand the requirements now and in a reasonable future that you would need. Are you expanding? Are you going to remain about the same? That'll help right-size the right solutions or the concepts to deploy for automating your month-end record to report process. And then go through a selection or solution process so that you can define the right set of solutions to deploy and set up from that. And then make sure to set up the automated reporting. Invest in the time to get the reports standardized, set for yourself, so you're not having to go in and prepare them on a month-in and month-out basis, or making changes to them, or modifying the standard reports that come out in Excel in some way. Just have it automated from that. All right, one last area which is dear to my heart, which is quote to cash, and that is what we've seen with a lot of organizations today is that they have a CRM system. Most organizations that are selling to consumers or to individuals have some sort of CRM. They have what I call a basic setup. Pricing may or may not be in that system. They may have some complexity that's involved in that, where they're using Excel-based pricing or outside the system pricing calculators, so that they could go back in and set up the information inside their CRM for quoting. In a lot of cases, organizations have still to this day have not integrated to their ERP. And so they have, I'll call it the pivot chair of pivoting from CRM, and it may be a handoff to another person, or they may have the same person take the order and enter it into the ERP system to process the order and get the invoices out. And it can be some heavy manual data entry that comes in. There's a manual printing of invoices in the office and mailing them to get them sent out to customers. And then we still see today that a lot of companies are only receiving cash in via checks and then having to manually apply checks or getting them mailed actually into their office today. And it's creating a delay in when they can actually get the cash in the door or at the bank. So what does it look like afterwards? We generally see that their CRM is configured workflow. They've put pricing inside the system so that the quoting process is being generated. It can be approved inside the CRM system. It can have complex pricing. There are tools in that to make it work. Some will have sales tax included. Some will not. I think that comes down to how they're using their quoting and contracting process that will come in. But the integration to the ERP in both directions, both from the CRM to the ERP and from the ERP back over to the CRM, is being deployed. And what that means is that the approved order that has been closed won in the CRM gets pushed over to the ERP. The order gets processed. If there's revenue recognition that needs to be done, that gets managed as well through the setups. An invoice gets generated at the appropriate time to the customer, and it's electronic invoices, meaning they're getting emailed out right away to the contacts. And the tools that we're seeing deployed today also come with electronic payment processes that can come in, and that could be everything from accepting credit cards. So when they receive their invoice, it could have a concept of paying by credit card right there, and or ACH payments coming back. But that coming back into the CRM system, you can get the invoices back into the CRM so the sales team or people that are working in client management understand what has been sent to the customer, and also what invoices, because you can have the payments coming from the ERP back into the CRM system as well, so that everyone at the organization has the right information to keep it moving. And the automated cash applications, if we're receiving checks, I highly recommend getting lock boxes, get the cash into the bank as soon as humanly possible, and then even have automated cash application being done based off the lockbox coming back into the ERP so that it gets processed as soon as possible. So it can be some huge improvements, not only in the workflow, but also in the ability to get paid. Make it easy for your customers to pay you. So how do you get there? In this case, I'd like to call it evaluate the customer experience. Make it easy for your customers to work with you, to include payments, and make it simple and a good positive experience. As you're going through that quote to cash, understand your 606 requirements. That has an impact on, in some cases, on how you're doing pricing. So if you're going to automate the pricing component, having that 606 requirements understanding will have a huge benefit as you get to doing the accounting work, getting it set up correctly. And then once you have the customer experience identified and the business requirements pulled in together, go through that selection process of what's the right tools and choices for you to make, and then adopt a solution and bring it to conclusion. But remember to set up the electronic payments and lock boxes for you and your customers to make it really simple for you to get paid. All right, John, do you want to take it away?
I do. Thank you very much, Scott. Appreciate it. And great stuff there. Okay, so now we're going to move over to FP&A. We're going to keep with our before and after theme. And as many times CFO, I have lived this many times over, before and after. And of course, we're most topically talking about utilizing technology to thrive in this new normal we've got here. But it's not like any of the things that Scott and I are going through here today are actually new. It's that there's new impetus for everyone to consider these technologies. So one nice thing is that a lot of these technologies are really established, used by many, many companies, large and small, and anyone can implement these things. So let's jump in on the FP&A side. And when I say FP&A, actually financial planning and analysis, this is really about companies getting to know themselves. Financial analysis is just getting to know yourself better, and then being able to apply that knowledge to improve your processes. And sort of in the olden days, air quotes here, finance only had small localized data to do analysis on. Let's do an extract from the ERP and see what we can make of this financial data. Or, over there, let's see what kind of limited data we have from our CRM or our, burgeoning website, et cetera. They tend to be very siloed, localized, and actually small data sets, which is an interesting advantage in some ways, because if you don't have the right tools, it can be easier to get your arms around, but it's extremely limiting. Excel only. Now, of course, there have been BI tools out forever, but in the past, they were really, well, A, expensive, B, difficult to implement and get connected, and then they were really difficult to use as well. So Excel just made sense, especially for growth companies, as a tool to use. A lot of companies, most companies, certainly were doing once a year budgets. I don't even like the word budget. We'll talk about the analog to that in just a minute here. Chart of accounts based reporting, and if you're not hip to what I mean there, it's that reporting is based on your chart of accounts, like overheads as a group and salaries as a group. And when reporting doesn't go beyond that, it's very limited. Once again, we'll expand on that in a moment here. Siloed, centralized finance. I've been at a couple of Fortune 50 companies over the decades. And we would have folks who would jokingly come into a meeting and say, "I'm from corporate, I'm here to help," just not the kind of experience anyone wants, nor the utility. And also FP&A based on finance data only. So each of these things is highly limiting. Let's take a look at the after. So first up, big data and from everywhere. So everyone knows data has exploded, so much so that it can honestly be intimidating, and logically so, until you recognize that there are many tools available, even for small and mid-sized companies that used to honestly only be the domain of massive companies. So far less expensive, cloud-based, and happily much easier to use. Big data from everywhere, and that relates to the second bullet, which is advanced analytical platforms. You can do amazing things these days with analytics and this whole class of BI or business intelligence platforms. They're still, by and large, not quite as easy to use as Excel. But they are a far cry from where they were. They're much more powerful. Now, nobody, least of all me, expects companies to go whole hog and abandon Excel. Excel is an amazing tool for ad hoc, limited analyses that you don't have to maintain over time. But increasingly these days, you really want to track things like website volume, cost per user conversion, sales pipeline, day after day, month after month. And when you have systems that can throw all the right hooks into the data sources or into a centralized data warehouse and just crank out this data that's instantly available based on millions or even billions of data points, it's incredible. And even small companies have that kind of data volume these days. So just amazingly enabling there. I mentioned I hate the word budgets. For me, it's all about the forecast. The forecast never sleeps, it never dies. It's always being updated when done right. And sure, you can pull out the forecast that you're creating for, January through December of a particular year and compare to that. But anyone who's lived with a budget or under a budget knows that the budget, quote unquote budget, which is done once a year, is out of date almost as soon as it's been launched. Another problem with budgets is that they're these big efforts. It takes many months, and by the time they get launched, they're even further out of date. And even though this year with COVID was an extreme example, budgets are never timely after the first month or maybe two if you're a good guesser. So most companies that have their act together around FP&A are using rolling forecasts. And once you have a forecast built, the feed and care of it on a monthly basis is far, far easier and faster than this massive, annualized budget process. And it gives you, a far more recency. So your May forecast is based on work that you're doing right then. It's based on the best information your business leaders have right then. And that's a far better barometer to be planning with instead of pretending that, geez, maybe things haven't changed so much since 6, 8, 9 months ago when we built that one budget. So moving to rolling forecasts is a big after. Reporting on things that move the business rather than chart of accounts reporting. So knowing what I spent on overheads and outside expenses, those numbers don't provide context in and of themselves, and they're not very interesting. They don't educate the leaders about the fundamental economics of their business. They don't help you understand what the cost of acquisition is for your next client. They're not giving you a great sense for where and how you're spending your money in ways that speak to you, like what's the cost of producing your next widget? What's the cost of opening a new location? What's your cost per square foot? What's your cost of generating a lead on the web? Those are things that you can actually take action off of. Far more interesting, and we just have more power now, more analytical power to do that sort of analysis, and frankly, with the same or less effort than the more limited reporting we used to do. Next up, decentralized finance. The cloud, of course, is an amazing enabler for all things. One of those things is the ability to push capability away from that center, closer to the action, so that, and it doesn't actually, all of that work doesn't have to even be done by finance people. So increasingly, for instance, with cloud-based forecasting platforms, you can have the people in the business, like in the BU, and it might be some combination of a general manager for a business and their marketing leadership and product people building their bottoms up forecast, which can, immediately or at any time be rolled up globally. So the folks who are in the center of the action, making the big decisions for the organizations, can at any time see what's going on at all levels. And when you combine decentralized finance with this idea of rolling forecasts and more powerful analysis, suddenly you're getting a much, much better view of where your company is headed. And forecasting is like magic. You can actually see the future without the pain of having to live it, and you can make changes now that affect things, 2, 12, whatever months down the road. So that's incredibly powerful. And of course, mixing financial and operational data. It used to be that all you had was what came out of your ERP platform or pure finance platform, and there's only so much you can do with that data, and it doesn't actually tell you much about your business. Once again, that was back in the days of chart of accounts based reporting, which just is not that useful. But if you can mix sales data with square footage or sales data with number of sales people, or sales data through channels and how many leads you're getting, online, etc. There's just an infinite number of analyses which are telling. We don't just do these analyses for the sake of keeping our jobs. It's about helping the business better understand itself and then do better for the future. So that's a whole pile of better in the after mode. And all of this technology has been around. COVID's certainly an accelerator, and to the extent possible, if your company feels the need to make changes, to react, to be more responsive, to know yourself better and perform better, this is a wonderful, wonderful time because there's so much technology available that's genuinely useful to finance and by extension, the businesses. Okay, so how do we get there? First off, build an FP&A strategy that supports the company strategy. I know that sounds silly twice, but the fact is, most finance organizations that I've run into don't have a strategy other than survival. Let's get to the next month end close. And to the extent they have a strategy, it's usually diffuse, not terribly well understood, and not connected to the company's strategy. Frequently, that's because the company itself doesn't have a great strategy. That's a different problem. But clearly, you want to be aligning your FP&A technology to your company's strategy so that you're understanding the kind of analyses you need to build, you're understanding the kind of work you need to do to make the business more effective. When those are aligned and when you've actually taken the hours, and it's not months worth of effort, it's hours over weeks worth of effort to build any sort of strategy, the payoff is just amazing. Suddenly all of your decisions have a basis in a plan, and it's far more coherent. So build that strategy, do a gap analysis. So where are we now versus where our strategy tells us we need to be? Where are the holes here? And of course, you fill those holes. Some might be external consultants, contractors. Some might be technology. Of course, some might be process, but your people tend to be the core of your FP&A machine. So you need to rationalize your folks, figure out who fits where, hire to fill gaps, and never stop training. It's always frustrating to me when I've seen any number of companies where they hire based on the skill set they need that day rather than on the skill set they're going to need over the next number of years, and they just expect someone to have all the skills they need, from day one, and they don't make a point to accentuate or add to that skill base. So unfortunately, that gets short shrift. I know everyone's busy, so who has time to learn? But the ROI on training is immensely high. So that's critical element. Rebuild processes and slaughter those sacred cows, right? Why am I still getting this report? I get this report, once a week, and I've gotten it for years, and I haven't used it once. Why is the finance organization even sending that out? That cheats everyone. Finance feels like they're doing something, and they're not, and then you're wasting your employees' time. That's your client base when you're in finance. So really understand what they need, what they're using, and just forget what's out there now. It's all sunk cost. Figure out what they need and build that instead. This next point, not to be undersold, hire fintech geeks and give them some rope. There's so much capability out there. It's actually hard to climb above the pile and get yourself educated on all of these new technologies and new capabilities. But if you have people in your organization who have a passion for technology and finance, that's a really powerful thing. And let them go out and figure some of these things out, and they'll actually enjoy doing the research and come back with a host of potential solutions that can then be considered by the business. So everyone does not need to be a fintech geek, but you need some of this DNA in your organization in order to really drive adoption, well, discovery, then adoption of technology. And then lastly, never be satisfied. Rotation programs, geez, that sounds like a big company thing. To the extent that you have more than one human in finance or accounting, it's incredible what people can learn and what they already know. Folks like variety. They love coming in and learning things that gives them extra energy every day, and they recognize that they're building skills and building their career. And I find that any activity that helps someone learn, get into a new environment and expand themselves, it's appreciated by them. And then you just have this ever-growing set of skills for your organization, which allows you to get more done, connect more dots, be more effective, etc. So that's a bit about FP&A and getting from there to here, or before to after. All right, a quick example of a little before and after. You remember this? I hope we're not all looking at this at the end of every month and year, because this doesn't tell me much. In fact, without tons of context, it tells me almost nothing. And something like this, and forget the fact that this, has a prettier face on it. It actually helps you draw some more conclusions if it's been set up the proper way. Hopefully we're looking at the things that matter, and we've worked with the business to understand the things that matter, et cetera. And by the way, this could be one of dozens of dashboards that one of dozens of folks at your company are using to drive themselves. So there's such an incredible difference when you kind of pull yourself into the modern world here. All right, next up, AI, and this should be robotic process automation. Sorry, note to self to update that. Robotic process automation. This is a pretty interesting thing. And AI being artificial intelligence, AI and machine learning are being worked on by lots of folks, and I'll tell you there are very few practical applications for finance, but they're working on it. RPA is much more current, and it's already being used by forward-looking finance and accounting organizations. When you think of RPA, for those who are not familiar, think of a macro in Excel. For hopefully folks have some familiarity with that. And basically, a macro in Excel is the capturing of a series of steps, which can be repeated essentially at the push of a button, or it can be automated and put into some Excel-based process. Well, RPA is like that. And as those of us who live and breathe finance and accounting know, a lot of finance and accounting is repeated and a repeating process. And that is not the value add stuff. So when you're processing things like 1099 forms or certain kinds of monthly reporting and other things, there's some intelligence at the front end of the process to set it up, and then you're just doing the same darn thing. And well, wouldn't it be great if we could automate that whole process and make it happen on a schedule, like literally not even with a click of a mouse? Some examples here in accounting, invoice matching, automated expense approvals based on rules, right? Algorithms, et cetera, which can be set up and set to automate invoicing, transaction risk assessment, so using heuristics or certain rules to assess transactions and flag the ones that need a human still, thankfully, to look at them. In finance, things like consolidations, once that's mapped out, geez, it's the same work every period. And these other places, this chart on the right is interesting. This is based, oops, where did our citation go? This is based on a McKinsey study on activities that can be automated using technologies that actually, they say demonstrated technologies, that is to say technologies that exist today, and their assessment is from difficult to automate to fully automatable. So you can read that list there and see where they believe things are going. And no, they don't know all, but I'll tell you these trends are clear. And there's no doubt that a lot of this work can be automated. And actually, that doesn't mean removing humans from your organization. That just means the humans waste less time on this automatable stuff, and they can spend more time thinking about things and doing more value-added work, which is incredibly powerful. To give you a greater sense of the sort of things RPA can do, and I mentioned it is very rote-like things, copy and paste, open files, connect to system APIs, which are data connections, fill in forms. These are things human beings currently spend a lot of time doing, and they are ripe for robotic process automation. Let's take a look at one such process that we've spent some time on here at Armanino, working on and looking at automating for ourselves and our clients. 1099s, they're a pain. Okay, it is a definition of a roach task, and the sort of baseline process has you essentially. Sorry, I clicked one too far by accident there. Preparing a 1099 template, uploading it to a system, completing the e-file and payments, emailing the client copies, and completing the task in a tracking platform. That's how it goes. You have to go through these steps to make a 1099 happen, to process it. And according to some measurements we've done, for a typical 1099 typical company, 15 minutes per. Okay, 15 minutes per. And then with a little work, most of which, well, the automation is the stuff in green, And there is still manual work, okay? So the whole process didn't disappear, but what we discovered was that the bulk of what mattered was up front, that preparation of the Excel template, and everything else could be automated through RPA. And that cut a 15-minute process to 5 minutes, and that's 1/3 the time. So you greater throughput, less time and effort. Obviously, it lowered the cost at the same time, provides scalability, the whole 9 yards. It's everything any organization would want. And yes, you have to invest. You have to take the time to break this down, understand how it can be automated, and do the work. But then this is going to be the gift that gives forever. So that's one example of RPA. How do we get there with AI and RPA? First off, and focus mostly on RPA here, honestly, because AI is still out there a ways. Start with high detail, high turnover tasks, just tons of processing with lots of little details that are repeated. We've got a few obvious ones there listed. Build a human capital strategy that has fewer humans, more adept at technology and how to make this automation work, and people who have a process orientation. Because when you have that, you can look at processes, understand inherently where they can be automated, and then apply automation processes and technologies. So that's a human strategy. And I mentioned a couple of slides ago when we were looking at FP&A, this idea of hiring fintech geeks. Well, this is not far afield from that. It's about hiring folks who have an affinity for this and some DNA in this. And then, of course, start small. Each individual 1099 is actually, you can easily get your arms around that, understand that. You're not going to damage anything. It's a great place to start with automation or any other tasks that are that rote. So start small, learn how it all kind of works together, find out who works well in this mode on your team, or you might have to find some new folks to bring in with this DNA. But you really can get from there to here. A lot of technology in this space right now, and if you deal with any sort of mid to high volume in these highly repeatable processes, RPA is a wonderful thing to look at. Bringing it all together. This has to do with the entire adoption of technology to hit this new normal. The new normal is you have to be able to react more quickly. You have to be able to absorb and make sense of volumes of data, the likes of which we've just never seen before, and build scalable, profitable entities. And the first step to pulling it all together, and I mentioned this earlier, is make sure you understand your corporate strategy. Whatever you're doing has to further that strategy, not just be a project for project's sake. You need to assess the current state dispassionately. That is really difficult for folks to do, especially if they've been in place for a long time. So sometimes it does actually help to have those outsiders come in and help you look at this because they can more clearly see where things aren't as they should be and help you identify those gaps. And then build a plan via your gap analysis and then execute your plan. I know that sounds very simple. That's very high level. In fact, it's completely doable. And, there are millions of companies updating processes, technology every year. And, it's really about having the will to do all of this, the drive and leadership, et cetera. So it's all out there, all available. And yeah, that's it in a nutshell. So I would say at this point, if we have any questions, let's hear about it. If you have questions you'd like Scott or I to address, please go ahead and throw them into the question box in your GoToWebinar control panel.
Great, thank you, John and Scott. Just looking through, there was a question asking if we'll be sending out the copy of this presentation. Absolutely. After today, you will be receiving it either tomorrow or first thing on Monday.
Super. Any other?
I'm looking through. I don't see any other questions at this point.
I must have put everyone to sleep. I apologize, everyone.
I doubt that. So, well, John, Scott, any final thoughts you would like to leave the group with today before we sign off?
Scott?
Well, making some positive changes and not sitting idle will have a real positive impact on an organization. So continue to adapt and change with our VUCA, market disruptors.
Yeah, that's actually a really great point. In troubling times, action always trumps inaction. So, taking a look at this, analyzing, getting to know yourself better as an organization, thinking about a strategy, aligning with it, and then doing something. Everybody likes that. It makes you feel like progress is being made, and tomorrow will be a brighter day. So.
Absolutely.
Maybe we'll leave on that note.
All right. Thank you, Kim. Thank you, John.
Pleasure.
Great, thank you. And so if everybody could just take a moment to fill out the survey at the end. And we will, if there were any other questions that were coming up, we will certainly get out and reach those and answer those to you personally as well. So thank you very much for joining today, and we hope to hear from you soon.